Hello, Warriors. How's everyone doing today? Hello, Alexander. Everyone doing okay? Feels like Friday to me. How about you guys?
Good early morning, Dale.
Kind of a quiet session.
Feels very Friday.
It's a pretty good action, getting a rebound in gold. Ryan, Kman, how are you?
Yeah, good. Can you hear me, Dale?
Who else is here?
I don't think he can hear you, Kman.
Anyone here?
Yeah. Dale, hello. Testing.
Hi, Mike.
Can you hear me, Kman?
Yeah, I hear you, Blake.
Yeah, he doesn't
He's
hear
here with me today. You
Dale.
guys can hear me, right? So I see Kman.
Hello,
Hi,
Dale.
Kman. Good afternoon. How are you?
Do you hear me, Dale? Hello, Dale.
I can hear you, mate. Morning, Dale.
I don't know why I can't hear anybody.
We can hear you, mate. You got your speakers on?
Well, jump in anytime you want. I can't hear any of my panelists this morning.
Okay.
Yeah, I don't know what's up with Dale. Hold on really quick.
Can you guys hear it? Okay. All right. Can you guys hear Kman?
Yeah.
You know what? How about this? I'm going to take
Okay.
over.
Why don't you guys take over? I'll try and figure out the bug before the interview.
All right. How you guys doing this morning? Good morning, Kman. Good morning, Ryan.
Morning,
Dale's
Ryan.
going to try to get his stuff straight. You know what? It's so slow overnight. I was actually hoping I wasn't going to talk today. I was hoping you guys had so much to say that I was just going to have to just sit on the sidelines.
Still, dollar yen is putting in a 70-point range, just doing the lows of the morning for some reason, which is a bit unknown to me.
Yeah, I mean, that's a pretty big move for, well, I mean, okay, I guess we should probably take a step back for a second and say it is, it is August. It's probably flow related, right?
Definitely, but
yeah, I mean, it's not like if somebody like yourself or Ryan, especially overnight, you guys have been in, I say overnight because I was sleeping, but you guys have been up in front of your computers for the last, multiple hours, all morning, and you can't put your finger on the reason why. It's probably, I kind of blame these ghost moves on just August, right?
Yeah, it might be something. It looks a bit yen related. All the crosses seem to be dipping. Yeah, it's just one of those things you then circle around and find out what's moving and if there's a bit of headline or something like that. But yeah,
I can't see any headline that we have missed. But anyway, yes, you're probably right. Dollar a bit on the defensive after the run up. We went really close to the 135.5 again in the dollar yen, and then it seems like to have been violently rejected again, and likely a bit of lack of liquidity, people jumping a bit too quickly. I thought today, honestly, this morning, that we would have a real shot at the 135 50 60, and then here we are 70 points lower, wondering what's going on. But yeah, the dollar is a bit on the defensive. The antipodians, Canada, MEX, it's all coming back a little bit now.
Yeah, we are seeing a little bit of dollar weakness. I want to point out something regarding the dollar index, and I did post this in the ForexAnalytix chat room, but I think it's important, and that's why I want to talk about it with you guys and gals, and well, you guys, specifically talking with you guys, but with everybody else here as well. The dollar index, a pretty big rejection at 107 or 106.95, which is a big resistance that we've been watching. You can see I've got all sorts of alarms set up around that area. Multiple highs, hourly highs. We hit that in European trade. When you guys were obviously in front of your computer at 106.95, once again, big rejection. And, I think that's a recipe for a bit of a pullback in the dollar. That should put the euro back above 102, I think. And I'm bearish, but I still think we might actually be able to recover here a little bit in the euro. What do you guys think about that? Because everybody's leaning pretty bearish into equities right now. I'm bearish, but that doesn't mean it's going to go down, right?
Yeah, well, I mean, I'm the opposite. I think equities are looking fairly bullish just over the last couple of months. So obviously it depends on what time frame you're looking at.
Right. Of course they've rallied sharply off the lows. I mean, we've been playing long risk for the last month and a half, but I'm saying that now we're at really critical resistance, and I think a lot of people are getting bearish at these levels, myself included. But we've been, obviously very bullish since below 3,800 here. But now that we're at really critical resistance levels, a lot of people are trying to lean short into this market. And, summer, it's slow. I mean, why can't we jam up another 70 S&P points from here?
Oh, we can. I mean, we spoke about it yesterday, and yesterday I said if we see 4,300 becoming resistance again, it's going to solidify the level. And look what we got, more or less after the Fed minutes, we hit 43.01, 02, and bang, all the way back down again. So the level is, we had the little breakout, the little flush, the little attempt the other day. It didn't follow through. The level solidified again. You go back to finding your ranges. 42.50 is your marker below, 43.10. Above is your marker above, and the market's got to do something. It's either got to go below 42.50, it's got to go back above 4,300. So as that price action develops, it gives you your levels to trade. But there's no reason why it can't shoot higher. The problem is, as you say, it's had a crack at it. It's got into stiff resistance up there. What does it do now? Does it completely collapse, or does it have another go?
I think it has another go. Now, here's the thing. Let's focus in a little bit on this setup here, and let's talk about the reasons why so many people are bearish at this level. Just from a technical, well, we can talk about the macro backdrop as well, but that's the kind of thing about when you're in a you're in a squeeze, you get this squeeze higher. Markets are climbing a wall of worry, and they just continuously squeeze higher. And then you're in a low volatility environment like we are right now in the summertime. Propensity is still for a squeeze, but everybody's citing these levels right here. And I'm going to just go ahead and start drawing for you. You have the 200-day moving average. You can see it in red, right? Let me actually change the color of this, my pen. That's not a very good color either. Hold on. Okay, you can see like the 200-day moving average is right here. Right, you have horizontal resistance right here. So a lot of people are like, okay, well, we got a little false breakout. We got horizontal resistance, 200-day moving average. That's a big rejection. However, one of the things that I think that's you could call it unfinished business right now is if you take, and let me move this over here. Let me move this down. Okay. You take the high right here, the all-time high, to the 2022 low. That's our, when we were down, whatever, 20 some odd percent, 23, 24%. Right here at 42.70 is the 618 retracement of this entire move. Then if you take the last leg lower, this is the last leg, right? This is the last move that we had that was lower. This is also 127% extension of that move. So what you have is a confluence of resistance up here above where everybody's trying to short. You have it just slightly above, about 70 points above there. And I kind of feel that we're going to see that. It's kind of, it's like that one last hoorah to squeeze out every last short before we roll over. What do you guys think about that?
Time-wise, it could happen towards the end of August and then reverse come September, right? We've been talking about that already yesterday, I think.
Yeah, I mean that's kind of what I'm thinking right now. And don't get me wrong, I'm bearish, and I've got S&P shorts working right now. But that doesn't mean that I'm going to be right. I'm standing in front of. I feel like I'm standing in front of a bit of a freight train right now. But you can see this this wedge in. Let me get back over to this mouse. So we got this wedge that we're nudging right up against the that 200-day moving average, but we're still holding wedge support. So anyway, I just wanted to kind of point that out, that I think technically things look a little toppy, but I'm not 100% sure that we're ready to roll over yet. So let me ask you guys this. You were on the flow show this morning. You guys had your flow show. What was big that stuck out like a sore thumb with you guys, overnight? Anything big that happened overnight?
The Fed minutes, really. And the market seems to be constantly trying to fight the Fed at the moment. It constantly wants a dovish tilt. It constantly wants to pivot, taking every little thing.
How did you read the Fed minutes?
Hawkish. Not more hawkish than they are, but still on the path. I mean, Bloomberg played a game with the headlines. They only put the headlines in about the Fed may slow the pace of hikes. They didn't put in the other side that they could do more. So there was a bit of shenanigans there. But the comments coming out the Fed are still, is just to put it in rough terms, they're going to keep hiking. They're going to hold the level of their rate hikes, perhaps for longer than they expect. To quote them, rates would have to reach a sufficiently restrictive level and remain there for some time. Now, they may stop doing 75s and go to 50s, and the market goes, oh, that's dovish. It's not dovish, it's just less hawkish. It still means that they're going to keep hiking. It just might take longer for them to get to their level that they want to get at before they start bringing rates back to neutral. But they even said that the jobs market is strong and it could impact GDP and cause an upside revision. But it seems everywhere you read this morning, the market is looking at the Fed and in a dovish light, and I think that's wrong. I think that the market is going to get spanked for that at some point.
Yeah, I mean, do you really think that the Fed is going to back off? I don't. It's like, why would they? I mean, when we have, I mean, yes, the economy is slowing, but we still have a really, really strong jobs market.
Yeah, well, let me throw another comment from the minutes. They saw a risk if the public questioned the Fed's resolve. Now, if that's not a line that says they're going to keep doing what they're doing until till inflation goes their way, I don't know what it is. I mean, how strong a signal do you want that the Fed are going to keep going?
Right. Yeah. Yeah. So because the minutes, now you read them as hawkish, but shouldn't it, if it was hawkish, shouldn't stocks be weaker right now?
I'm probably wrong. It's not hawkish in terms of more hawkish. It's just staying on the hawkish path. People called that dovish last night. It's not dovish. It's less hawkish.
But the stock market is reflecting that today.
Yeah,
we're catching a bid. So are you? Let me ask you: do you think that you should be selling this rally then because you believe it's still very hawkish?
No, I think Blake, something different happened. If you look at the commodity currencies, if you look at the antipodians, you look at
the bid.
Copper, for instance. I think that China's President Xi came out earlier this morning saying they will still try everything to open China more. We even put it on our blog and everything, and we'll insist on opening up, and that has signaled the bottom in antipodians, and I think that's a bit positive risk, if anything. So that may
be what's doing the trick there.
See silver ticking up, and I think that may be part of the move that we see in this rebound in stocks. I wouldn't think it's really the Fed.
Okay. Yeah.
That's my-
Okay. That makes sense. That was the other thing that I didn't see those headlines overnight, and that's probably what's really creating that. And I think you bring up a good point, because I was talking with Chris Weston just 8-9 hours ago, 10 hours ago, and he was really looking at this bearish breakdown in copper, but we've reversed that. And so that's the catalyst, was really China right there. That's interesting. Okay, good point. Hey, Dale is back. Dale, can you hear us?
Yeah, buddy.
Oh, hey, you're back. Good.
You put me back to Humanate.
I was just listening to you guys.
Yeah, no. I saw that you popped back in. I wanted to make sure that you could
Do my interview.
Yeah, you could do your interview. But hey, I'm going to let you take over so you can talk a little bit about what you saw happening.
Okay. All right. Today's kind of a
So it's opposite day.
a rest day. It's kind of the way it looks to me. I know we're getting these pullbacks, little pop in euro and pound, but I still think the dollar has more left in it. You know, maybe we pull back to 106. To me, this looks like consolidation we're getting here. And I see the resistance you did, but still think that we're gonna have one more push up towards 730, 750, 720, and one more push up in the end. This too is, you know, smacks of consolidation. You know, maybe getting a little ABC and another move above 136. The 10-year did kind of accomplish what I thought. You know, I was looking for this one more drive. We did it. I still think though that there's 3% left in it. Gold, I still, even though we're up today, still think 1744 or so is going to be the time to start scaling in. And silver almost got there to 50% yesterday, but I'm, you know, somewhere in the 40s to 20s down here. So I think it all kind of ties together with yields peaking around 3. I'm looking to buy the euro, maybe 100 lower from here. I just want to see it clean out all the stops under, you know, this 101.20 and this low, and I think this was the NFP low. You know, this kind of looks like a flag to me, so I think there could be one more flush, and so now I'm closer to fading the narrative that I've been working and talking about for since Monday, really since last week. I mean, when was it when you were short euro after a report and I got long the dollar index around 104.60? Was that, it was on a Friday, I think. Was it last Friday?
Are you talking about the move when we went up to 103.50?
Yeah.
That's the top of that chart right there.
Yeah, it's Friday.
Well, wasn't that a news day? There was some news that day. Was that the NFP?
No, I think you're talking about CPI on the Thursday and the PPI Friday.
Okay, that was it. PPI. Okay.
Yeah, it was, well, actually CPI was on Wednesdays, PPI was on Thursday, and then Friday it rolled over because it couldn't break out after both of those weak data points last week.
Yeah, so it was Thursday. So, you know, that it's been in progress. You know, you just sat with what you did for a week. You know, now we're having a rest in that, and we're close to completing those moves. That's,
no, you're right that it actually looks like a flag, and you have it marked up there in green at the very bottom of your chart. It's 101.10. That's a 618 retracement, and that's really been a pivot in the market since July 13th. That level gives way. That's going to open the door for a retest of parity, in my opinion. If you guys are Euro bulls and you're like, look, I've been making this point for the last few days, actually the last couple of weeks, and I'd love to talk to you guys about this regarding the euro. I mean, there's nothing really optimistic to look for in the Eurozone. Like, correct me if I'm wrong. I mean, I'm not very bullish the Eurozone in general. And like I said, changed my mind. But I have to admit that every time, you know, we get down here, the euro gets bought up for some reason.
Yeah, like yesterday was a beach ball with the pound selling off and everything.
Yeah, well, it's just like
Wasn't it?
parity. Like, it scares me to be short. I mean, I am short euros. I've been short euros for the last, you know, week, and I feel like I actually want to press my euro short, but it's very buoyant around this parity level. Kman, Ryan, why is that? What do you guys think?
Yields. Just look at yields and yield differentials. They are holding the euro back from collapsing because the euro
1,000% came in, 1,000%. And if you look at the pattern of yields look stiffer in Europe than they do here.
Exactly. I mean, look at the 2-year differential. It's shot up again. And what is actually worth noting is that the euro through the crosses has made a comeback, but it's starting to fade again. And against that, you have a euro dollar, which is completely stuck right here and now between 101 and 103.5. And for longer term investors, perhaps it's just not worth even looking at it right now. And we are the ones trying to make a big deal out of a too big figure move, which it is for if you're managing your own money.
I'll try it here.
A big move, but for longer term
78.6.
investors, they're probably not trading that much right here and now. That's just my view.
Yeah,
Ryan, what do you think? Why do you think the euro is so sticky around this parity level?
I think it's twofold. We have come a long way over this year. You know, we've come a hell of a long way. So it's found itself a level. It can't get through that parity level. Is it over? Does that mean we found a bottom? No, I don't know. Possibly not. I think we're going to find out in the next couple of weeks. I don't think it should be underestimated. Yeah, we've got summer markets and all that. And like you point out, the S&P, when you get big enough technical levels, the market isn't going to push it. Next week, we've got Jackson Hole. And I joke about it.
Jackson's
Reggie Jackson, Andrew Jackson. Which guy?
Ryan, have you seen Jackson's Hole? I'm just wondering. Asking for a friend.
But I've heard all about it.
You've been out with the Cub Scouts too long, man.
I do. Dale will pick that one up. Yeah, you know, I think that's, you know, when we get to that, and we're going to start hearing all about it next week, and the market's going to start getting its expectations down the table. That's when we're going to find out what's going to happen. And as we get into September, when we get fuller markets back, liquidity back, then that's going to be make or break. If the market's going to bust that level, that's when it's going to happen. If it can't, if it tests it in a let's call it the first week of September, if we get a test of parity and it can't break it on whatever's happening with the Fed and everyone else, that is going to be a pretty strong signal that we found the bottom.
Yeah. So I'm going to ask your opinion, and Dale, I'm going to take back over the screen here.
Yeah.
So what could, and this is that, just so everybody can see really clearly here, this is that 618 retracement. You can see it right here. And my opinion is, and I was very clear with the ForexAnalytix subscribers yesterday or the last couple of days. And maybe it was even here. I can't remember because we do, you know, a lot of different shows throughout the course of the day. I am very bearish the euro, and while we're below this blue trend line, there's no reason for me to be bullish. Zero reason at all. And yes, if it broke above that trend line here, I might start getting bullish, but we have to break all the way back above 103.50 because that was that 2016 spike low right here. So it's a massive breakdown point. And for me to get really bullish, we have to make it all the way back up here. However, you know, you look at the euro right now, we are flagging, like Dale pointed out. We have the 618 retracement of the below parity there to the, you know, 103.70 or whatever it is. But what, in your view, and I'm asking you guys to speculate here, what in your view puts us in a new range lower instead of being in this range? What puts us in another range lower from here, you know, range that maybe is from 99 cents to 95 cents. What do you guys think could be the catalyst that drives us down there? What do you think?
European winter.
I'm sorry?
The economy is absolutely collapsing through winter with all these energy problems.
Yeah, and where does it show up first? Like in PMIs, you know, employment, retail sale. What do you think?
At the moment, we need to hire someone in Germany with a ruler to go and measure the level in the River Rhine, because that apparently moved in markets this morning. So that's one indicator. But yeah, you know, the PMIs are going to be looked at, as well as some of the other data as well. You know, we get the zoos, what's the other one? I can't remember the other German number. I've forgotten it. Not IPO. Okay, help me.
Yeah.
What's the other one?
So what's
beer at the Oktoberfest?
Dale,
Yeah.
seeing us, like, what's love got to do with it? What's Draghi have to do with it? What's Italy have to do with it? Anything with the Italian elections that could drive us lower?
No. I don't
No?
think. Well, I mean, it may be one of the weights hanging around its shoulders, but we are so used for Italy not to have a government, and they are a debt burden in Europe anyway, so that won't change much. But I think, yeah, the dragging on in Ukraine, the problems in energy, and the one thing that we have to note there is that the Norwegians who are exporting gas and oil to Europe to replace the Russian oil, they said that from autumn they may screw back on the exports because they are going to need their products for their internal market. So that may be an additional drag on the euro.
Oh wow! And I mean, you look at the euro Norway. Whoops, let me go back over here and readjust that. I mean, that chart looks pretty gross, pretty bearish. All right, well, it's interesting because, you know, going back to, like, oh shit, did I just? Okay, never mind. Looking at the euro dollar here, the flag pattern, Dale, that you pointed out, that actually would target, you know, back below parity. But shoot, do you buy down there and play the range? I mean, that's what you're thinking, right?
I'm thinking 78.6. I'm going to try it with stops under the low.
So you're gonna get ahead of the bus, somewhere around here.
Yeah.
So I want to ask you your thought process on that. While wait, do we have any data coming out, by the way?
Yeah, we've got Philly Fed, jobless claims, and a bit of Canadian PPI.
Yeah, all that data is probably going to be important, but the Philly Fed is going to be probably the most important this morning. But I want to ask you this, Dale: if you can clearly see a pattern, why would you buy it ahead of the pattern completion? Just asking.
Because I've been waiting for this, and you know, I'm working off the narrative that the dollar peaked over 109, and that what we're getting is a failing rally that could take us, you know, above 107. So if I'm looking for a failing rally in the Dixie, I should be looking for a higher low in euro, and that's where I want to give it a shot, because I think everyone's going to throw in the towel under that support level that you're showing under 101. So I think that we're just going to have a little bit of a stop hunt under 101 for.
Okay, so you don't think this pattern is going to complete? Like me, I always try to wait for a pattern to complete here, like in this case, but I see you're trying to just step in front of it a little bit because you think we're going to create
it gives me pause, but the plan, my plan was that you know, if that pattern completes, of course, the dollar index is going to be trading 109 again, and I'll be gone. So,
it could. The dollar index could make it theoretically a lower high because it's a euro story, right? Not necessarily a.
But I think the Canadian and Aussie will actually be the better buys.
Oh yeah. That I agree with. I mean, look at how well the Aussie is performing now, and Kiwi.
It might flush under those recent lows, but
yeah. Okay. Yeah. All right. Hey guys, we have in less than a minute we have. Oh shit! Shoot. Right now, hold on. Data coming out right now as we speak. Let me move that out of the way. Let's go. I'll keep it on the Canadian right now. We have data coming out right now. Initial jobless claims better than expected. Continuing claims better than expected.
Let's back the trend a bit. Canada PPI, raw materials year on year, a sizable drop, 19.1% versus 32.4 prior. Month on month, down 7.4%. Main PPI was down also, 11.9 versus 14.3 prior year on year, down 2.1% on the month as well. So a bit softer.
Do you see the
PPI
Philly Fed out yet?
No, it's always late. Oh, here we go. We're out and
6.2.
6.2 versus -5 expected. So a better number, a bit of a difference between what we saw from the Empire.
All right. Well, a little bit better than expected. So dollars lifting a little bit, but not a lot. Stocks are coming, this is once again, good news is bad for equities. Bad news is good for equities. We've got good news actually for US data pretty much across the board. So the dollar is getting a little bit of a lift. The dollar is, easier to trade because it is reacting positively to this news. Where stocks are opposite. So we're in that living in the upside down for those Stranger Things people that are fans. But really, we are Thursday going into Friday. It's going to be, my opinion is we're not going to get a whole lot of. What's that?
Feels like Friday.
It does. When you came on, I heard you, even though you couldn't hear us, Dale. I agree with you. It does feel like a Friday today, and it is, August. So just be really careful getting too aggressive. I'm gonna say this to you all as traders. This is the type of market where you don't want to be wrong-sided and stay wrong-sided. It's hard to pull out of a hole if you get yourself into some trouble when you're trading. So what I like to do when things aren't very liquid, if you find yourself in a bad trade, try to cut it early. Because you don't want to let that bad trade get away from you, because it's hard to dig yourself out of that hole when you just don't have a whole lot of liquidity. So that's just something I wanted to make sure that I mention and get out to the traders at large. So Ryan Kman, any last minute thoughts before we pass it over to Dale?
Not really.
No, trading day, everyone.
After turnaround Tuesday, now we have a turning upside down Thursday. Have a good trading day.
Thank you.
Yeah, look at, I guess case in point, the dollar yen, you were just, noticing how, oh my gosh, it looks so bearish. I didn't think we were going to go up. Then here comes the data. Dollar yen goes screaming back. This is one of those things that, look, if you got caught chasing the dollar yen short over the last hour or two, it's right up in your face. And now how do you climb out of that type of loss today when it's difficult? It's a difficult market.
Go the track.
Even being long, it was a bit squeaky bum time, I tell you.
Yeah, I'm sure. Hey, look, pick your levels, trade your levels, plan your trade your plan. And with that being said, come join us in the ForexAnalytix community. That's where we're all chatting all day long. Dale, have a great interview with the goddess of grains.
Yes.
Thanks, Ryan and Kman, for being here as always. And Dale, have a great interview.
You got to know when to hold them, know when to fold them, know when to walk away, know when to run. You never count your pips when you're sitting at your laptop. There'll be time enough for counting when the market's closed. Everybody, Kenny Rogers is a trader, and Angie, that's for you. I have a bushel basket of wheat, goddess of grains, that I lay at your feet. And I need some explanations about the action in grains, and there isn't a better person to do that. So
well, I appreciate that, and I don't know how I'm supposed to follow that up. I hope it is not with song.
Okay, well,
because I can't carry a tune in a bucket.
I can't help myself sometimes. So anyway, the big you know what I want understand. What I don't understand is that
Yeah.
grains pretty much, you know, all of them, they've all come off,
Mm-hmm.
and they've all come off, and they look very similar to, you know, other, you know, commodities. They haven't been as weak as crude, but you know, that's another one. And you know, copper came off pretty strongly. And I just don't understand why there's no differentiation between grains. I could understand a relationship between, say, oil and copper and the economy. But is there demand destruction that people they're
Yeah.
not eating as much, or
Well,
we have a good crop coming in? Or is
yeah.
it just that the markets have become so financialized that grains trade like everything else?
Yes to all of those things. I mean, I think all
Oh,
of them kind of play a little bit of a role. You know what I mean? I think one of the things that we started to see or have started to see is the shift in trade flows, or the shift in how grain is moving, or where our end user, how our end users are sitting, things of that nature. And we've seen folks really work to develop more localized agricultural production practices as well, kind of leaning towards more traditional crops suited for their environment. You know, North Africa and surrounding areas has really increased the production of cassava and a few other crops that they have used in the past, you know, that can actually kind of replace their need for wheat or corn or something of that nature. Now, I'm not saying that they can live forever without it, but, you know, we have seen to where if someone can figure out how to reduce their demand marginally, and lots of folks do it, you know, it makes an impression on the market as a whole. In addition to that, you know, shortly after the Russian invasion into the Ukraine and into Ukraine and all of the stories that we were looking at there, and the idea that we were never going to see these Black Sea ports reopen, you know, now that we're seeing these trade flows shift back to where officials in Ukraine think they'll export 4 million metric ton next month, or by October, excuse me, for a monthly pace. And that's barely behind where they were prior to the invasion. And that's not,
you know, that's totally amazing to me, because
isn't it?
you know, yeah, because I saw news reports of farmers out in their fields wearing flak jackets with potholes
Oh
from
goodness.
munitions,
Yeah.
and fields set on fire. It's amazing that they've made that kind of recovery.
I would never bet against a farmer, and I would never bet against a Ukrainian. So I would never bet against a Ukrainian farmer. You know what I mean?
Wow,
Like, and
that's
so
really...
that's one of those things that I was probably one of the rare folks out there that was like, we're going to figure this out. You know, I think the UN's involvement, I think money, you know, those types of things. But now it has become this sort of bullish risk factor, right? Like we're relaxed, we're okay, we're shipping, we're thinking that we're going to see this huge increase in you know, shipment capacity out of Ukraine. And so now it's kind of that 800-pound gorilla in the room, in the sense of one tiny error and the whole entire situation is, you know, a powder keg, so to speak. And so it's just something that we're aware of, but in the short term right now, it's not something we're continuing to be worried about. And so you're kind of seeing that risk premium fade a touch, as folks that need supplies are able to source them, at least at this point, because we just got done, especially with Northern Hemisphere harvest.
Okay, so we're a month and a half away from harvest here in the US. Are we bringing in a good crop? Because all summer, all I saw was lack of rain stories. So
oh yeah. And that's the $1 million question right now, is what does our overall production look like? We've seen a lot of areas struggle with drought, and there were some concerns over extreme heat. We've had higher lows at night across much of the Western Corn Belt, which tends to influence production, maybe even more so than your daily highs. Last year we saw that you could have limited rainfall versus normal and still produce a decent crop. And so right now folks are kind of the mindset. The USDA came out last week and said the crop's probably around 176 bushels to the acre. That's below normal, but it's still enough to where we feel we have adequate carry out, especially, you know, as we're looking ahead to what kind of global demand there is, what kind of domestic demand there could be, you know, with concerns rising over potential shrinking livestock herd size, especially cattle, because it's just been such a train wreck for them to try to make money with all of these high feed costs and things of that nature. So you're seeing some shrinking demand going forward from a feed standpoint potential. What's going to happen with Chinese relations? Like the increase in Chinese demand, especially in corn, was what really shifted us from a bearish market structure to an extremely bullish one. And so if we see the continuation of a breakdown there and South America is able to step in and produce another large crop, potentially another record crop next year, it just gets a little hairy for us long term.
Okay, so as a chartist, the smallest give back and relative strength, the leader still seems to be the bean market, followed by corn, and wheat actually turned out to be, it's kind of the weak sister, making new correction lows here. Any reason for beans really not giving back much? Compared to corn and wheat?
Yeah, from a global standpoint, overall, we're still exceptionally tight, and La Nina looks to stay in place across the southern hemisphere for at least the first quarter of their growing season.
Go away, little girl.
Yeah,
little
I wish
baby.
she would get a life. Like, it's time to grow up and move along. And so, it's kind of unprecedented to see a third year in a row of an impact or potential impact that La Nina could have. Now, right now, it looks as though the monsoonal moisture will kick in early based on some of the forecasts that people smarter than me, meteorologists smarter than me, are showing. The concern is, could it turn back over dry in October or something of that nature? And so, we all have short memories. And last year we saw about a 25 million metric ton reduction in crop size. So you're looking at a 500 to 750 million bushel reduction. And because of that, we saw a huge shift into the US to kind of cover that hole that the loss in Brazilian production had caused in China. And so we're kind of holding our breath. We need to see Brazil produce a good crop. I say I just mean to kind of stabilize everything going forward. We saw massive new crop export sales this morning in soybeans, with China in as a big buyer. What's most interesting about that is we really didn't see that sort of, we knew that business was happening, but we didn't realize it was happening to that extent. Like it came in much higher than traders were expecting this morning. So, the big question kind of continues. What does South American production look like? What does Chinese demand production look like until we get what does Chinese demand look like? Until we get a better answer on both of those things, you're going to see soybeans stay elevated just because of the tightness globally, over the next at least 6 months.
Okay, you think we could see $20 beans?
No.
I just wanted to show some long-term charts
Right.
because people say, well, the grains have gotten cheap. Well, they've gotten cheap from where you were used to seeing them, but Angie and I remember $2 and $3 corn and $4 wheat, and here you can even see $8 beans in 2020. So prices have still doubled or up 50%.
They're elevated, from a historical standpoint. I said no pretty quickly when you said that. You think we see $20 beans? No. But I think it's going to take it would take a major production issue in Brazil. And so you can't count that out. Again, like I said, the third year of La Nina, you can't say that 145, 150 million metric ton crop is nowhere near in the bin. They haven't even started planting it. So we're going to have to wait and see. Obviously, if they have a major crop failure, there's really no room for the U.S. and our carryout to step up. And so, never say never. But if things, proceed as normal or even just slightly below normal from a production standpoint, we should be okay. And then again, the big question mark becomes Chinese demand and what our relationship looks like with them on trade, moving ahead. And I'd almost bet our relationship with them on trade moving ahead is almost based on what South America is able to produce from a crop
Maybe
standpoint.
we should send Nancy Pelosi over there to ask the question.
Can
we please improve our trade relations?
We could send her to South America to watch the Brazilian crop size and let us know what that looks like.
So has Fed policy and higher rates come into the whole equation?
Yes.
With rates?
Yeah.
In what way? In what way? How does it affect?
Well, I think, similar to what we saw in 2020, May of 20, right? In my opinion, there's been two landmark statements from the Fed that has changed direction. The first one was in May of 2020, during the 60 Minutes interview when he was like, listen, we have infinite control. We can do whatever. We have power, blah, blah, blah. In the market, you can look at a chart and basically the next day we shot higher from there. I think after the July meeting, he had kind of hinted at it in June, and after the July meeting, he's like, listen, we're going to do everything it takes to kind of get these prices under control. And so you saw that really kind of everyone back away from the inflation trade from the start of July. I mean, you looked at July and it was a bloodbath. Both seasonals played a role, obviously because corn and soybeans tend to back off after the 4th of July, just because we know more about production. But I do think the Fed kind of saying, listen, we're going to stabilize these prices, resulted in a liquidation from the speculative trader that had been approaching this thing as an inflation trade. I'm not going to say you don't see a return, especially if the Fed, I think, lets their foot off the accelerator too soon.
Yeah.
So I think we're going to watch really closely and see what that looks like, because I don't think you can say we've stuck a fork in inflation. Like, we've had 1 month where we're like, oh, okay, everything's better now. The Fed's going to start cutting rates. And like, that's kind of a dangerous way of looking at it, just simply because we are so elevated still. And so, yeah, it plays a huge role, in my opinion, in the idea of a global recession and what the heck's going on in China from an economic standpoint. All of these things, have repercussions, and it'll be interesting or almost scary to see how it all unfolds here over the next 6 months or so.
Is there really a demand destruction, which means people are going on diets and they're not buying as much food? Is that actually happening?
I think
They
the
can't
potential could
afford
be
to
there.
buy the food.
Yeah, I think the potential is there, especially in the poorer nations. People are going to go without, and that's awful. And you would hope that we would see beyond that, but I think that's the case, is that people are see beyond our politics in order to make sure that people who are hungry have access to food, obviously. But I think there's more substitutions taking place. I think there's certain things, there are cuts, potentially, like I said, and they're not massive, but 1-2% around the globe has a big impact on overall demand. So I think people, if they're not going without, they're potentially going longer without purchasing. And I think now that you're seeing, freight rates around the world kind of fall off, and availability from a logistical standpoint kind of come back into play, you're seeing folks also go back more to hand to mouth. So we had this idea that you're going to see people kind of continuously stock up on things. But I think now that we feel a little bit more comfortable about, what the supply chains look like as a whole, you're also just seeing a slowdown. Like, folks aren't buying double what they need over the next 6 months. They're buying what they need over the next 6 months, and we'll think about the 6 months after that in 2 or 3 months. And so I think that kind of changes things a little bit and puts us on our heels, because it's different than what we've been seeing over the last couple of years.
Do you think that the industry would prefer a weaker dollar? Because
Yeah.
the dollar's been pretty strong. It's possible that it could be putting in the top here. Would that put a bid under everything tangible, including grains, if the dollar top?
It's possible it would help us with our exports. Right now we're really seeing really poor demand for wheat and corn, and wheat tends to be the most sensitive to how our currency is trading. And so I think that is part of why you're seeing these moves lower. But yeah, I mean, we tend to like to see a weaker dollar when it comes from an export sales standpoint, but with a lot of our reliance on production input, production items, fertilizers, and things of that nature, the stronger dollar has helped mute a little bit of that price increase that we've seen. And so it's kind of 6 in one hand, half dozen in the other to a certain extent, but it does have a major influence, or can have a major influence in price. I tend to argue a weaker dollar has a larger influence than a strong dollar in price. So if we were to see the dollar fall off, I think that would help put a really strong floor underneath wheat, and probably help it, add some value back from these multi-month lows.
Okay, most unexpected event between now and, say, the end of the year in the grain market, and what do you think that could be?
I think a return to trade war relations, but I
Okay.
would say based on this morning, between China and US, but based
Okay.
on this morning's export sales, if that does happen, they're stocking up first. So we're talking late in the year. So I'm probably not going to be in by the deadline if that's the case.
Oh, okay. And let me ask you, and I'll wrap it. It's kind of somber, but we're celebrating that Ukraine can get their grain out
Mhm.
through the port. But is there a lot of chatter about what's happening in Ukraine around that nuclear power plant? Because if that blew, that would make a shipping blockade
Oh,
look
that
like
wouldn't
a
even
party.
matter. Yeah, exactly. I mean, honestly, if the shipping would no there, yeah. I think
I
I
know,
think
it
it's one
makes
of
me
those
speechless
things,
too.
right? Yeah, and it's rare to make me speechless, but you just managed to do it. But I think
Yeah.
it's one of those things where we just kind of know it's a risk in the back of our mind, but we're just going to choose to ignore it to a certain
Yeah.
extent, simply because it's one of those things to where, whatever
You don't even
happens
want
kind of
to
happens.
consider. Yeah.
Yeah. I don't know how you would even
That would
get
be a
prepared for it.
disaster for the whole world. Really.
Yeah, it would be an epic black swan. I mean, and I don't
Yeah.
know in what way. Like it would just be devastating all around. And that's the worst part about the world in which we live now. You're just kind of like, well, I guess it could happen.
Yeah, but it seems like everything can happen. I hope things are happening for you with your new company. Are
Yes.
you looking for people to follow you and get in touch with you?
If
Or
they want to, they can. I love interacting with folks and talking markets as much as I can. So if you want to, you can reach out. Our website there has a contact us form. You can go ahead
Right.
and grab that, or there's a phone number on there. And then on Twitter, I'm Goddess of Grain. I'll go ahead and throw that on the chat there, and you can find me there. Or I just started doing TikTok, like morning market updates and things,
Oh
which
yeah,
is
how's the response on that? People like TikTok because it's
yeah,
short attention
yeah.
spans. Yeah.
It's good for
Okay.
me. I've enjoyed it. It's been interesting, but I feel weird being like, I'm on TikTok now, but you can also find me there.
Okay, well, Angie, Goddess of Grains, I've brought my sacrifice for everyone to have a good crop, that you oversee that we have a good crop here in the US, and that both farmers and consumers benefit and have overflow. May your bushels run over.
I appreciate it. Thank you so much for having me.
All right, Angie. Nice talking to you.
Nice talking to you.
Angie Setzer, everybody. You could follow her on Twitter at Goddess of Grain. And if you want to know about the grain markets, Angie knows them like the back of her hand. So that's going to be a wrap for us today here in F.A.C.E. And you join the team in about 20 minutes for the morning edge. I'll see you tomorrow. We're wrapping it up with Trader Victor Sperando. Adios, everyone. And don't just count your ears of corn, count your blessings. And we'll see everyone tomorrow. Adios. Thank you, Angie.